everyone. My name is Greg Jackson, and we have our guest speaker, Roland Macias, that's here with us today. We also have my mentor, Natalie Neef, that's here supporting the work that we're doing, reaching out. We specifically designed this to to do outreach for educators. The information is applicable to anyone in the community, but we wanted to do a special meeting to do outreach, excuse me, for our educators because we want them to participate in the wonderful programs that are available to them. We also want them to know that this market is hot, and that sounds like a hype salesman sales pitch, and I guess it could be, but it is extremely true. You know, even as I'm showing homes to people, even as we're even as we arrive, there's someone there viewing the home, and even as we are there viewing the home, there's three or four people waiting to come in, and we're telling people that if they see a home that they like, they need to know that there's a lot of competition out there for the home. So we want to let them know that yes, it's a hot market, but it with the interest rates being low, it is a great time to get into the market. One of my friends was sharing with me that she bought her home for 700K, and that's just a rough figure, 700K, and then after 1 year, the value of it increased up to, uh, well, excuse me, yeah, 7K is up to 900K in just 1 year. So it's just amazing what is happening in the market, and we want to show you that we have a team that will support you. We have a team that will work with you. And one of the first things is working through that process of qualifying for that loan. So what we will do is we want to start sharing with you information that we'll put together specifically for our educators. And with again, we want to share with you that our mission is that we want everyone to find their place in the world. We want you to find that home. Okay. There's a home available for you. And as we say that, my name is Greg Jackson. I'm your host for this event. I have the honor of working on the team Natalie Neef, and as I said, she's here with us today, working with a wonderful company, Compass, which is very much involved in with equity issues and reaching out to the community and working with every buyer, everyone that wants to find a home. Compass will do that for us. So we want this to be a very efficient meeting. So we just said that we would do this for an hour. So our guest speaker is Roland Macias. He's a senior loan consultant. Um, Roland is Roland is the guy that I trust and have a lot of respect for because of his work. And particularly, Roland worked with us in the purchase of our home. So a lot of confidence in him, and he is working diligently to work with people to let them know about different programs that some people will not touch or will not work with. Roland is the man that will do that for you. We also have Kevin Sales, who's not with us today, but he provided some information that we will post that information and share that information with you. So he'll work with the title rep and research for our information, but we mainly want to focus on the the home buying process and the loan qualification process. So without further ado, we welcome each of you. We want you to ask questions. We have time set aside at the end for this. We're recording this also so that we can share it with others. So without further ado, I will turn the floor over to Sir Roland, our not only our resident expert, but our highly esteemed expert in the field of real estate and loans. So Roland, take it away.
All right, thanks, Gregory. And thank you everyone for taking time on your Saturday morning to kind of learn a little bit about lending and how to become a homeowner. I don't know if all you guys are first-time home buyers or you've owned properties in the past, but this is a unique market right now. You have to get pre-qualified. You have to have all your ducks in a row because like Gregory is saying, there's a ton of people looking at one house. And I had a listing agent. It was awesome. She responded to all the offers with a maybe 4-paragraph. It was this long little note saying that if you didn't mark every box, if you didn't cross every T, she's not even going to look at your offer. She goes, I'm not here to tutor you. So it was this great, I think I shared it with you, Gregory.
Yes.
Yeah, it was perfect because she says, you know, you have to be on the ball here. There's 40 offers. She's not going to look through everyone to make sure everything's there. If it's not there, you're not even going to look at your offer. So part of having a complete package is understanding what you need to have as a borrower. And that's kind of why we're kind of doing this, to show you what needs to be done and where you need to be to make a strong offer in today's market. You know, I just recently had a realtor call me saying that her clients fired her, and they fired her because she was telling them that a lot of offers for decent houses are going over the asking price, and that they probably had to be prepared for that, to pay an extra $5,000-$10,000 over the asking price. And I guess this person went to work or whatever and told someone that, and that person told her that the realtor just wanted to make more commission. And that's why she was saying that had happened. Well, that's not true. This market is kind of hot, and a lot of people are just offering over the asking price. So again, we have to be prepared. We have to put together the tight offer, and we have to have all our ducks in a row to even be considered for an offer on certain properties. So you know, with that, we can start the screens here. So first time buyer questions, and a lot of first time buyers, some of them don't even want to talk to me because they say, I know we're not ready. And that's kind of like, well, you may not be ready, but let's find out what we need to do to get you ready. So, you know, questions they have is, do I have enough money, savings to buy a home? You know, when Gregory wanted to put this together for educators, I thought it was a great idea because Calhafa has loan programs where they'll give you all the down payment and up to 3% of the closing costs. So last year, middle of last year, Calhafa changed the program where that down payment amount was only capped at like $10,000 for anybody but educators. And I think firefighters for some reason. But so it's a great program for educators because they still kept the giving all the down payment to the borrower. So it's a great program. I always, whenever I hear that you work for a school district, I always go to that program to see if I can use it, because you can literally buy a house with like $3,000 or $4,000. So so it's do you have enough money? Let's find out what programs we can get you into to get in with the least amount of money. Credit scores are important, and later in the slide we'll have some ways to figure. If you don't want me to run your credit, there's ways you can find out what your credit score is, not using these what are they, so Credit Karma, that type of thing. Those don't give you the true score. So we'll show you what you can do to pull your own credit to get the actual mortgage credit score that a lender would need. You know, what I find a lot of first time buyers being tripped up with is going from paying rent to paying a mortgage. So they're paying $1,500, $1,800, $2,300, $23,000 in rent, and their mortgage payment's going to be $3,800, and they're saying that's way too much. But when you break it down, a mortgage is not rent. It's investing in your future. So we'll go through all that and show you how, even though you're paying $3,800, $3,000 for your mortgage, it's equivalent to paying like $1,200 rent. How the pandemic is affecting the housing market. I've been doing this for almost 30 years and I've never seen a market like this. And it's, it has to do with availability of homes, the stock, there's just no inventory. And rates are super low. So people say, well, I'm going to hold off to buy because prices are too crazy. What's going to happen, because this market is different than a lot of markets, the buyers qualify for the houses. Back in 2008, when the crash happened, that was a whole different scenario. People just didn't qualify. They were getting NAGAM loans. They were being kind of like shoehorned into the mortgages. Today, you have to qualify for your mortgage. So what's going to happen is prices, in my experience, I don't think there's going to be a big drop. It might level off, but the minute rates start going up, the same house you bought for, let's call it 600,000, if it drops to 550, with the mortgage going up, the interest rates going up, you're going to have the same, if not a higher payment. So why not buy now and start owning? Because in 10 years from now, it's going to be worth more. It's a long-term investment, And the last question here is, do you really need a real estate agent to buy a home? It's important. The agent should be able to guide you and help you get the best deal possible. And FSBO's out there right now. A lot of people, it's such a hot market. I'm just going to sell it myself. But there's a lot of little things that, I think an agent guides you through that makes the purchase more secure for you. So yeah, an agent with some experience and really has your best interests at heart is a great way to go. Why homeownership matters. It's super important. Stop paying your landlord's mortgage. That's obviously true, but I think number 2 is super important, building generational wealth. And I can give you a ton of examples, but a good one is my parents. They bought a house because there were 7 kids and no one wanted to rent to them anymore. So they were forced to buy their first house. And from there, they bought another house in a great area, their move-up house. And my dad's 89, my mom's 85, and they still live in that house. It's paid off. They don't have a landlord. They have plenty of equity if they want to do something. So it's more building that generational wealth. And if they didn't buy their first house, they wouldn't have ever been able to afford the second house they bought, which they're still in. And so homeownership matters. If they would have kept renting, if my dad wouldn't have been told, I'm not going to rent because you have too many kids, they probably would have still been renting. So homeownership is important, and the sooner you get into it, the better. And I like the quote Gregory put on here: don't wait to buy real estate and wait, because it's an automatic wealth builder, especially in California. So next screen. Okay, the goals of today is hopefully you guys can, write down the questions you have, because we will have 10, 15 minutes of answering questions. I want to make sure you guys understand that, anyone can buy a house. Is it today or is it 6 months from now? That's the questions we need to answer and set you up so that you can be ready to buy a house. We'll give you the holistic view of the information for the variety of approaches. There's different ways of doing it. Some people want to combine incomes with a parent or their siblings or their children. And, you know, maybe you need a 4-bedroom house. You know, a lot of people now are using renovation loans to convert the garage into another living unit, an ADU. So there's a lot of different options that you can potentially have. Gregory is saying that I do loans that a lot of lenders don't, and I do a lot of renovation loans where they add bedrooms to a house. So if you look for a 2-bedroom, 1-bath, I could do a renovation loan to make that into a 3-bedroom, 2-bath. So, you know, you don't have to look for that 3-bedroom, 2-bath, 4-bedroom, 2-bath that everyone's making offers on. The 2-bedroom, 1-baths usually have less competition, but when you do a renovation loan, you can make it that house that you want. So we'll go over all that fun stuff. And yeah, so first steps from start to finish. So the initial consultation, you know, after we finish this seminar, if you guys want to, you know, really find out what you qualify for or what steps you have to take to get ready to qualify, you know, call us and we'll do an initial consultation. We'll give you a list of items that I need to take a look at to get you prepared to find out what properties you guys can actually go visit, because you want to visit a property that you can probably buy. You know, visiting properties, driving around for a house that's out of your price range, it just doesn't make sense. So let's find out what you qualify for so that we can, you know, find those properties that you actually can make an offer on. And then we'll get all the paperwork ready to make that offer. And again, it's super competitive now. So having a complete offer prepared correctly and with all documentation, just to make it easy for a seller to take a look at your package and everything's there, is the best way to make an offer. And hopefully after you get the offer accepted, we open escrow, you guys do your due diligence, your home inspections, do the appraisal. Hopefully everything turns out to be okay. Then right before you close, you do your final walkthrough with the agent, make sure they didn't take items that they weren't supposed to, and make sure the house is in the condition that it was when you saw it. Then we fund your loan, it closes, and now you're a happy homeowner. So that's kind of the 8 steps of home buying. And who's on your team? You know, it's important. You know, Gregory, the title guy, the escrow, all these people come together to make the deal work. Now, I couldn't dig it up, but I had this list of people involved in a real estate transaction. I think the list was over 90 people. And it just went through everything, like assistants and escrow officers and title guys and title agents. It was a pretty amazing list. You wouldn't think there'd be that many people, but really the amount of people that touch your file while it's going through escrow is amazing. And it's important that we choose the right team to make sure things go as smooth as possible. I wish all deals would close in 20 days, but there's always some issues. I have employers that don't want to fill things out. I got appraisers that put conditions that shouldn't be there. There's always something, but again, having the right team, we'll fight through everything and get the deal done and close and make you guys homeowners. Be prepared. That should be flashing and really be underlined, and especially in today's market, you have to be prepared to buy in this market. So that's super, super important. So when I pre-qual people, some people allow me to run their credit. Others kind of don't want their credit to be ran. But I can't really do my job unless I know what your credit score is, because it's an important part of what programs I can get you into. So if people don't want me to run their credit, what I do is I refer them over to myfico.com. What that does is that allows you to go in, sign up for their service, and choose what kind of loan you're looking to get. So whether it's credit card, installment, like buying a car or a home, those are the 3 types of loans that are available. You got revolving, installment, and a mortgage. And each one uses a different algorithm. So MyFICO lets you choose the type of algorithm you need to get me the correct score. So again, if someone doesn't want me to run their credit for whatever reason, they need to run that, because I really can't give them an idea of what they qualify for unless I know have the right credit score. So that's a good website to go to, because Credit Karma and all those, they never match the mortgage credit score. And how much money do I need to save for a down payment? Again, if down payment assistance is something you want to use, and being teachers or working with school districts, you don't even have to be a teacher. You can take advantage of CalHFA's program, which gives you the down payment. And once I run all your information, I got your credit scores and everything, and that's when I issue the pre-approval letter. With that pre-approval letter and the DU, which is desktop underwriting approval, that's what Gregory will use to make the offer, to show them that you do qualify for the home. What does a buyer look like? A buyer looks like you. Buyer looks like anyone that really wants to stop paying rent. And the better we can make you look on paper, because that's all they're going to see when we make the offer, the better chances you have of actually getting the property. Let's see, income, FICO, months reserves, 20% down. Now, 20% down, you don't have to put 20% down. I mean, again, with down payment assistance, it's zero down out of your pocket. Now, there is a down payment, but it's not made by you. It's made by CalHFA. They're the ones that issue the money. When I pre-qualify people, let's go to the next slide, Gregory. I think it's got, well, we'll go through this one. So the home loan process, loan applications, supporting document, credit report, that's all the stuff that I need in order to actually issue the pre-approval. Once we have all that down, then you can start the property search. Because again, if you're looking for stuff above your pre-qualification, it doesn't make sense. So what we need to do is figure out what you qualify for before we start the property search. Because I have people that kind of start looking ahead and they get all excited because they love this house, and it turned out it's $100,000 over their budget, and they get kind of bummed and they don't want to continue searching. But you got to get your foot in the door. I had a client, I mean, she was looking for 2 years. Finally, she buys a house, and she ends up buying a 1-bedroom, 1-bath, but she was able to buy a house. And about 2 years ago, she sold that and moved into her 3-bedroom, 1-bath. But she couldn't save fast enough to have a bigger down payment to buy that up-leg house. So she says, you know what, I'll just buy this 1-bedroom, 1-bath and get in the game. And that's what she did. And it worked perfectly. Because, you know, sometimes your first house isn't your dream house, but it does let you accumulate equity where you can move it over to your next house. And in today's market, that's why people are putting $200,000-$300,000 down on homes. They bought a house 3 or 4 years ago. They got all this equity, and they're moving into the next house and moving into their dream house or their larger house. So that's what you got to think of. You know, buying the first investment will lead to you being able to buy that house that you really, really want. Okay, next. Now, this is an acronym. I love acronyms. I tell Gregory, you know, when I was in college, I was a bio major and taking all my chem classes, chemistry and stuff. I had to memorize a lot of stuff, and I always used acronyms. So I'm kind of still a lover of acronyms. So for home buying, CIA is the thing that I use to really make people aware of what the important things are when buying and trying to buy a house or getting qualified. And it's in that order. It's your credit, your income, then your assets. Because if you have a 520 FICO score and you make $1 million, I can't get you a loan. But if you had a 800 FICO score and you made $60,000, I can get you a loan. So credit is the first thing I look at, because if you have anything under 580, you really have to get it to at least 580 on your credit score to even get an FHA loan. It used to be 520 before the pandemic, but they got rid of that program, so they bumped it up to 580. So credit is super important. Income lets me know how much you can afford. So it lets me kind of tell Gregory that what your price point is going to be. And assets, I mean, again, with down payment assistance and with, if you're working for the school districts, we need very little assets to buy a house. But so that's the order that you have to look at your when I'm getting you qualified, which you have to look at: credit, income, and assets. And again, just credit, income, and assets. It's the most important three things that I need when I'm qualifying you for a home purchase. So credit, so different programs require different minimums. So again, FHA, 580 is the minimum. It used to be down to 520 with 10% down on FHA, but they kind of suspended that. Hopefully it'll come back. I did a handful of deals like that. The rate's a little higher, but it got people into homes and it got them to stop paying rent and start owning properties. So, so right now it's 580 is the minimum for FHA. VA's 620, conventional loans 620, and jumbos, which is it's buying stuff probably over $1 million sales prices with jumbo programs, and 680. Most jumbo lenders want you to have a 720, but there are a few out there that'll go as low as 680. So how are credit scores calculated? People always ask that. I mean, it's an algorithm they use. They don't really tell us what exactly makes up your credit score, but this is the 5 core factors that we know of. Payment history, amounts owed, length of credit history, 10% go to new credit inquiries, and 10% of types of credit. So obviously, if you have a ton of lates, it's gonna hit you hard. Amounts owed, what they like to see is that if you have $1,000 credit limit, they like to see that you only have like $300 or 30% of credit usage. When you start going above that, it starts affecting your credit score negatively. So you always want to keep your balances below like 35% of the high balance or your credit limit. So, sometimes when clients have scores that are a little lower than we need, I can run what's called Credit Expert. It's a software program that tells me what they can do to raise their credit score. But this is the basic stuff. 5 things is payment history, amounts owed, length of credit history, new credit inquiries, and types of credit. So that's a overall view. Okay, so proposed monthly housing expense. So on a sales price of $662,310, this is with 10% down. That's your loan amount, $596,079, and this is for a conventional loan, 3% interest rate. Your payment with taxes, insurance, and everything is $34,970. What I've been doing lately, because this is again 10% down, so you have that mortgage insurance, and this is mortgage insurance at that loan amount of only $94,000. It's probably someone that has pretty good credit scores. Sometimes when we have a lower credit score, that mortgage insurance will be more like, $300 a month. So what I've been doing recently is when people are selling a house, they have a huge down payment, you can actually buy out your mortgage insurance. So if you don't want to pay for mortgage insurance, but you don't want to put 20% down, you can actually, I can run a calculation, and sometimes like for $10,000, you can buy out the mortgage insurance, which is going to give you more buying power, and you're going to get rid of the mortgage insurance and not even have it on your monthly payment. Because mortgage insurance, you can't write it off. It's just extra money you're paying. And it makes more sense to buy it out and to try to put extra money down on your down payment. So every case is different, but I'm tending to run that calculation more nowadays than ever, because again, people are selling their houses, have a ton of equity, and are putting it down on their next purchase. And sometimes the numbers just make sense to just buy out the mortgage insurance versus putting a bigger down payment. So next slide. All right, so there's like 9 different versions of down payment assistance programs. The main ones that I use are GSFA and CalHAFA. Now, GSFA, it's a good program. It's actually a grant, where CalHAFA, it's a silent second. So it's like having a rich uncle that says he's going to lend you money, but when you sell or refinance, you got to pay him back. CalHAFA tends to help you more because the rates are lower, even though you do owe the money when you sell or refinance. It allows you to qualify for more house. And again, if you work for a school district, CalHAFA gives you up to 3.5% of the purchase price. Where if you don't, they'll put a cap on the amount of the down payment. So it's always a go-to for people that are employed by school districts. GSFA works. I haven't used it in quite a while because CalHAFA, when I compare the scenarios side by side, is always a better option for clients. So types of loans. So there's basically 3 types of loans in the conforming limits. There's FHA, there's VA, and they kind of work differently. So an FHA loan, a first-time buyer, you don't have to be a first-time buyer, but it's more lenient with your credit scores, and the down payment's only 3.5% down. And you can buy, a single family up to 4 units using FHA. VA, obviously you have to be a veteran. That loan works a little different than FHA in that it's 0 down payment. You do have closing costs, but you can have, in a regular market, you can ask the seller to pay for your closing costs, but in today's market, probably not going to happen. So on a VA loan, you have 0 down payment, but you still got your closing costs you got to come in with. And one thing with the VA loan is I can combine that with a CalHAFA to take care of your most of your closing costs. So I can kind of piggyback the VA loan with the CalHAFA. So I've done that in the past. It works really well. Next. Conventional loans. So conventional loan mortgage is you put 3% down in certain areas, but most people come in with 5% when they're first-time buyers using conventional. And conventional loans are very, very sensitive to your credit score. So if you have a credit score of 620, I mean, you're better off going FHA because the conventional loan is very, very sensitive to your credit score, and the rate's going to be higher, and that mortgage insurance is going to be super high. So conventional loans, they're a little more strict in qualifying. Debt ratios don't go as high as FHA, so you qualify for a little less home. But again, each individual is different. I always look and see what program is going to benefit the client the most. So I present a few scenarios and, find out what's best for the client. Next. So these are graphs using data from 2020. It's always kind of been this way. The affordability index for different ethnic groups are always different. The lower ones are Hispanic and African American, but and I don't know why that is, but there's plenty of programs to help people become homeowners. So I'd love for those numbers to change and make people of color, I guess, homeowners, because again, the benefits for homeownership are huge. Recently I've been sharing with Gregory that studies have come out that it's actually healthier to be a homeowner than a renter. And it's kind of interesting. I've been doing this for so long. I never thought of that aspect of homeownership. I guess supposedly it's less stress because you don't have a landlord coming down on you. You can paint your house whatever color you want. It's just a lot more freeing. There's a lot more freedom in being a homeowner. So the more people we can help become homeowners, the better for everybody. So hopefully, we can make a difference.
And Roland, I just want to add also that from this chart, we could see the median prices of homes in different areas. So as the buyers are looking at this, just be mindful of this is the median price, average price of homes in that area. As you can see, if you go out to San Bernardino, Riverside, homes are a lot cheaper, but just keep this in mind as you're looking at the home that we wish to buy and the areas that we want to buy those homes in.
Yeah. Yeah, a lot of people are moving out to Riverside and San Bernardino County because the houses are a lot cheaper, less expensive. And with Corona, what a lot of people are finding out is that they can work from home for certain jobs, or they're able to come into work, 4 days instead of 5. So there's a lot of, I think it's going to change things a little bit with people realizing they can work outside of coming into the office every day. Why home ownership matters. Home ownership has been the most effective way to Americans build wealth and can be passed down from generation to generation. It also stabilizes communities, provides access to education and access to employment opportunities. And that's so true. Home ownership is just, there's pride in owning your home. And I've owned a lot of rentals, and some renters were pretty good. They kept things clean. Others, I'd have to talk to. So home ownership is, it just gives you a little pride of ownership. And there's a huge difference between renting and owning your own home. So what happens during escrow? So during the escrow period, well, you got all the pre-qualification, getting everything together before you make the offer. But once that offer is accepted, it's time to perform. So typically, I guess there's kind of a rule of thumb that when you put in your deposit, you put in 3% of the purchase price. It depends, but in today's market, I got people putting like all the down payment down as an escrow deposit to show that they're really serious about buying the house. So the 3% is a good number to have. The second thing, the lender will process your file and we'll get all your information. Hopefully we'll have all your information up front so everything goes smoothly. You'll get disclosures sent to you. You'll review them and sign them. Then we'll order the appraisal after the disclosure is signed. And during that disclosure or due diligence period, which is normally 17 days, but I've seen them cut down to 10 days because I don't know why listing agents do that, but they do. But that's when you get your home inspections, the appraisal, and get everything dialed in to make sure the house is what you want and there's not major issues happening. Once you get the inspection back, in a regular market, you can go back to the seller and ask them to make certain repairs. I'm sure you could do that, still do that now, but that's, home inspections are always important. People ask me, should I get a home inspection? You should, that way you know what's happening with the property. Sometimes I buy properties, I don't get home inspections because I'm going to redo everything anyway. But for a regular homeowner, home inspections can be a blessing. Go get the appraisal, sign all your loan docs. So the way it works, we submit your loan file. We verify your assets, your job, the credit. Then we send the file to underwriting. They'll give us an initial credit approval of the file. Then the appraisal comes back. We get all your verifications. Then we'll resubmit the file for the final approval and clear to close, which means we can order loan docs. So at number 7 is when we have the loan docs. We send them to escrow, and they'll call you. They'll set up the appointment to sign the docs. Nowadays, with COVID, it was kind of interesting, but now it's getting back to normal. The escrow officer will set up an appointment either at their office or they can actually go to your home and have a notary sign the docs for you. And they turn that back into us, the lender, and you guys, the borrower will wire their funds, and we'll fund the file, it'll record, and you'll get to move into your house. So that's kind of the steps of home ownership in the process. So what to buy? So first time buyers, I mean, typically they'll buy single family homes. I have some that have said, look, I want to buy a house, but I think buying a duplex might be best, because that way I can rent it out and reduce my my monthly mortgage payment. So remember, with FHA, you can buy with 3.5% down. You can buy 1 to 4 units. 3 to 4 units FHA is a little tough because there's a lot of other factors. The property has to qualify, but a duplex for sure, you can buy FHA and not have to worry about the property qualifying, because there's some income calculations you got to make. And right now, with prices the way they are for a 3 to 4 unit, the math doesn't work out trying to use FHA to purchase a 3 or 4 unit, but a duplex for sure. And it's a great idea if you can find a duplex to buy, because you can buy a house, you get rent to help you with the mortgage payment. Then later, when you want to buy your next house, you can refinance the units. Now you got 2 tenants paying that mortgage. And sometimes if you have a positive cash flow, it'll help you qualify for more house on the up leg. So, you know, it's a good option if you can qualify for that. Single family versus condo. Condos are obviously less expensive, but they do have an HOA, and most HOAs seem to be in the 300s, 350, 340. So that takes away from your buying power. But you know, if you can't afford a house, condos might be a way to go. And you know, there's some nice condos out there. Right now, trying to buy a condo FHA is tough, because a lot of condos, especially like for some reason the Torrance area in Hawthorne, there's just no FHA condos, because the condo complexes have to be approved by FHA for you to get financing, FHA financing on condos. So most condos I'm doing are conventional loans. Tenants in common, you know, I've never really done a tenants in common purchase, but it works. It's interesting because when prices keep going up, you can actually, if you have a 4-unit property, you can sell each individual unit to somebody through tenancy in common. It's interesting. It's a little different, but you know, they, like in New York and certain high cost areas, they've been doing this for years. It's started to come into Southern California because our prices keep going up. But if you're interested in that type of financing and that type of property, I know we can do them. I just have not very much experience financing tenancy in common. So yeah. Where to buy? Well, your budget will dictate that. And you also have to look at a few other things. I mean, I just closed escrow a couple of days ago. It's 2 sisters. They live in Long Beach. They ended up buying in Beaumont. If you know where Beaumont is, it's like way over, like going to Palm Springs. And the underwriter asked, it's like, well, how are you going to commute to Long Beach? And their jobs with COVID, they were allowed to work out of their house. And the companies, they work for different companies, but they're going to continue to allow them to work out of their house. So they got a letter from their employer saying they don't have to commute to Long Beach. They can work out of their home offices. So they were able to buy this beautiful home for like $370,000 in Beaumont, and they don't have to commute. So they were able to buy out there and not worry about, you know, the commute to Long Beach. So, you know, if you have that type of job, or if you can transfer, I have another guy bought up in Victorville. He worked for UPS. He just transferred over. He bought this house for $280,000 like a year and a half, 2 years ago. The big 2,400 square foot house right off the 15, and he transferred to the UPS warehouse or hub over in the high desert. So where you buy, budget has a lot to do with it. Sometimes people buy knowing they're not going to be there for a long time, but they want to get into owning properties. So, you know, we'll discuss what's best for you and see where we end up with buying. So when should you buy? Well, you know, now is always a good time. You know, if you qualify, you might as well stop renting and buy. Right now, rates are super low. Prices are high, but with low rates and high prices, if rates go up and prices come down, you're paying about the same thing. So there's actually some graphs. I should probably include them in my next presentation, showing what prices were back when in 1995 when rates were at 9% versus today when rates were at 3. Houses might be like 300,000 back in 95. Now that house is 700, but the payment's about the same because the interest rates are a lot lower and they're a lot higher back then. So, and now when's the time to buy? Now, if you can afford it. And if you can take advantage of the down payment assistance, I mean, if you can buy a house for $3,000 to $4,000, that's what it costs to move into an apartment with all your security deposits. Okay, get ready for your path to homeownership. So you have to have a mindset that you know, you want to buy a house because it's right now in this market, it's pretty tough, but it's doable. And we're closing escrows every month. You know, people that had their mindset that they want to stop renting and they bought a house. Depending on where you purchase, you may already be buying something with equity. You know, in today's market, if you bought in 12 months ago, like Gregory said, he knows someone that paid 700,000 for a house and now it's worth 900,000. How long would it take you to save up $200,000? I mean, if that person wouldn't have had the mindset that they wanted to buy a house, they probably would have kept renting and they would have given up all that equity. So I think in today's market, values are continuing to go up. I think a lot of stats I see that they anticipate another 9%, 10% adjustment in prices going up. That's pretty amazing. But there's so much competition and there's so little inventory. So I think now is a good time to buy. Okay, next. So key terms when you're starting buying houses, I mean, these are things you're going to hear over and over again if you start looking to buy a house. Appraisal, and right now appraisal contingencies are disappearing. I mean, some people are saying, I don't care what the appraisal comes in at, I'll buy the house. I had a family buy a condo, I think it's in Riverside. They offered 367. The appraisal came in at 335, and they're still buying it. The dad told the daughter, "I'll give you the extra money," you know. And I talked to him yesterday, and he's like, kind of saying, the neighbors are happy that I'm doing this, Roland, because I just increased the value of their homes by $41,000. So, you know, he's right. But 10 years from now, I mean, the house is going to be worth more. The condo is going to be worth more. You know, he's doing this because he said the money in the bank is making him no money. He might as well invest it in his daughter's condo. And instead of her driving an hour and a half to work, she's 15 minutes from work. So he's happy to do that. Closing statements, you'll always get a closing statement showing where all your money is going, your down payment, all the fees. Assessed value, that's the value that the tax collector puts on their property. It's always different than the actual appraisal value. It's usually lower. Contingency, a lot of contingencies are just non-existent in today's market. Credit, money given to a buyer from the seller through escrow closing. Again, not a lot of seller credit right now. I'm doing a lot of lender credits, like the client that's buying the condo. I'm giving him a nice lender credit to help him out because he's got to come in with extra money. Closing costs is all the fees that are involved in buying a property. It's all your appraisal fees, title fees, escrow fees. You know, sometimes they throw in closing costs, the impounds, because When you put less than 20% down, you'll have impounds for taxes and insurance. And it's part of the funds monies that you have to bring in to close the deal. Conventional mortgage, we kind of went over that. So conventional mortgage is FHA, VA, and conforming, which is Fannie Freddie. That's a conventional mortgage. Once you go over the loan limits, you jump into jumbo mortgages. So, but most of my clients are conventional lending, conventional mortgages. Escrow, that's escrow is interesting. They're a neutral third party. They're only there to hold the funds and distribute the funds. That's their job. A home warranty, pretty much everyone gets a home warranty, and they come in handy. You move into the house, the water heater goes out, the heating goes out. If you have a home warranty, they'll replace it, and you'll kind of. Typically, it's 1 year. So for 1 year, you could kind of call the home warranty company and get them to fix things. Sometimes there's a deductible. Most of the times there are. Just like your car insurance, you get in an accident, you have to pay a deductible. Earnest money deposit, we talked about that. Normally, it's 3% of the purchase price. In today's market, sometimes people are just putting in all the down payment. Title insurance is super important. And ensures that there's no surprise liens after you close the escrow and find out that the previous owner had some $100,000 lien that now you're responsible for. So if something like that happens, title insurance will cover it and they'll take care of paying that secret lien. Recording fees are just the fees that the cities and counties charge to record the deed. And a preliminary title report, again, that shows what kind of liens are on the property, if there's any other conditions on the title. And it's important because you need to know if there's any restricted things that you can do with the property. And that's the end of the presentation. Were you going to show a video of Kevin? Or?
No, not
okay.
Not at this time. So,
okay.
Yeah. So with that, I just want to stress that if you have questions, you can put them in the chat. But also, as Roland has presented things, giving you an outline, giving you an overview, we are stressing that we are here to support you through this process. And we know that as a community of educators, information, knowing the process, knowing the steps, having someone coach you through the process, having someone support you through the process, having it scaffold is extremely important for us. And so we want to use those skills that we have, and Roland was also an educator in his day. So yes. Using those skills, we want to establish a relationship with you, let you know that you have a team working with you. And we encourage you to screenshot, Roland's information, screenshot my information, but going through that loan process, that loan qualification process is the first step. And then once that's complete, then we're willing to work with you. I'm willing to work with you and have a great supportive team, like with my mentor Natalie, that's here also attending this. Years of experience, and the Compass team, a very strong team to support you. Really strong in technology, not just a real estate organization, but a technology team using all of this information to support you. So again, this is our information. We will share all this with you. We ask that you share your information with us so that we can contact you. You can put your information in the chat, or you could send your information to us either in the emails that we have sent to you so that we can support you.
I don't have any questions, but I thought this was excellent. Thank you so much.
Thank you, Natalie. So
Thank you,
yeah, it's
Natalie.
coming to Natalie. Again, that's Natalie. And again, Natalie is my mentor, my neighbor, full of energy, full of energy and
But not
love.
showered. But
I mean,
not
you don't need to know
showered.
that. We don't need to know that. We don't need to know all that. TMI, TMI, TMI. But just willing to support us as we're working to support our network of educators. So thank you, Natalie, for being here and supporting us in this. And we give thanks to Roland for his expertise. Again, very methodical information. As he said, he's willing to run different scenarios to find out what works best for you. We're not trying to push anything off on anyone. We're willing to work with you to find out what will best meet your needs. Okay. All righty. So with that, so I'm gonna check to see if we have any questions from anyone. Okay. And the phone is ringing, so that's a different phone call, but we're not gonna take that call right now. Okay. So that being said, Roland, any other thoughts for now?
No, I just, if you guys are on this Zoom meeting, it's because you showed some interest in purchasing property, but feel free to reach out to us or ask any questions right now. I mean, that's what we're here for. And we want to help you guys become homeowners. And if you already own a home, to help you invest in more real estate.
Right.
You know, I have investors buying in Bakersfield right now. I mean, you can buy 4 units there for $500,000, which is crazy. And rents are still pretty good up there too.
Right.
So, yeah.
And like, for example, just one property that Natalie has is a property that where, an individual could multiple units, perhaps buy it and live in one of the units, as Roland was saying, and then rent out the other units. So not just property to live in, but investment property also. And then those individuals that are in homes and you want to have an evaluation of the value of your home, we're willing to do that for you. Again, supporting you as you seek to move forward with your needs. Okay.
Hi,
So,
question.
yes, ma'am.
Hi, I was looking for the chat box, but I realized it's not there. But I
Okay.
do have a question in regards to the closing cost.
Yes.
Is there always a closing when it comes to purchasing a home?
Are there always closing costs?
Yes.
Yes, unless you can get the seller to pay your closing costs. And again, with down payment assistance like Cal Halfa, they'll pay up to 3% of your closing costs. But yeah, if they're typically in a straight transaction, you will have closing costs. You got to pay for the appraisal, title, escrow, your impounds. So normally it's like 2% of the sales price, right around there. It will be your closing cost, 2.5%.
Thank you.
You're welcome.
Okay. All right.
But
Good.
if you're a first-time buyer, educators, Cal Halfa, they'll lend you the whole down payment, which was huge. When they changed that program in the middle of last year, it was kind of a bummer because they were no longer giving all the 3.5% down to regular borrowers. So they only kept it for educators. So take advantage of it.
Hi, my name is Ingrid. I'm a friend of Natalie's, and she told me about the call the other day. So
Okay.
Thank you for all of the information. I enjoyed the presentation. I'm going to reach out to you guys. I just have somewhere to go like right
Okay.
now.
Okay.
No
All
worries.
right.
But thank you so much.
Thank
You're
you.
welcome.
Ingrid.
Thanks
Welcome
for joining
aboard.
us.
Okay. Okay. So again, we will share our information here, and you could email me so I could send the slides to you and send the Zoom to you, the Zoom link to you, and some other information that Kevin has, and we'll share that with you also. And we can also see Roland's information. So definitely Roland is the man that we need to speak to first in the process. But again, we're sharing our information here. Again, encourage you to take a screenshot of it or write down our information and contact us so that we can continue to support you. And we just want to support our community. We believe in our community, and we love the work, support, respect the work of educators and those that are serving our community, those that are working to bring health and healing to the young hearts and minds of our individual. We want you to receive the benefit of home ownership, one of the best, if not the best, investment in your lifetime. So we want you to have that. So with that, we're going to end the meeting. Thank you so much. Have a great day, everyone.
Thank you, everyone. Have a great weekend.
All right, take care. Bye-bye.
Thank you.
Bye-bye.